Hello, this video is about non-residents who are buying or selling real estate in British Columbia. Non-residents can own property in British Columbia, and unlike some countries, there are no extra taxes or fees payable arising because of non-residency. However, there are some important considerations. Mortgage qualifications in Canada are different for non-resident buyers than for resident buyers. Non-resident buyers should consult with a lender or a mortgage broker to understand the qualifications for a non-resident buyer. Non-resident buyers will need to open a Canadian bank account if they're getting a mortgage, and will need to do so in person with identification acceptable to the lender. Non-resident buyers do not, or sellers do not need to be present in BC to execute closing documents. A number of lawyer and notary firms utilize technology to streamline the closing process for non-resident buyers or sellers. Documents can be forwarded electronically and executed in front of a lawyer, notary public, or embassy official in most foreign jurisdictions. And it is important to make arrangements for the transfer of monies well in advance of closing. Non-resident buyers should also consult with a Canadian tax professional to discuss tax treatment both during the period of property ownership and on disposition. A non-resident owner of rental property will be subject to a 25% withholding of taxes on the gross rental income. Administrative rules require that the owner or agent remit these amounts to the Canada Revenue Agency. A non-resident owner may file a special form to have the withholding taxes reduced, which essentially treats the non-resident as a resident with respect to rental income. Now, when a non-resident sells property, they need to obtain a clearance certificate from Canada Revenue Agency. This is necessary to ensure that the non-resident pays any applicable tax arising from the sale of the property. When a non-resident sells property, the purchasers must withhold a portion of the sale proceeds until a non-resident seller has provided a clearance certificate. This is handled through the lawyers. The holdback is normally 25%, but could be higher depending on the use of the property. A non-resident seller should retain the services of a tax professional to assist in obtaining a clearance certificate. This should be done as soon as possible, as the process can be quite lengthy, taking up to 8 to 12 weeks. Under circumstances where the holdback would not leave sufficient funds to pay out an existing mortgage at the time of closing of the sale, a seller can make a claim for hardship, and the Revenue Agency will expedite the issuance of a clearance certificate. A clearance certificate will only be issued once the tax is actually paid. Canada Revenue Agency will review the particular sale transaction to determine whether or not capital gains tax is payable, but will also require payment of any other taxes outstanding or payable by the seller. The seller can claim certain expenses in determining the adjusted cost base, including property transfer tax, goods and services tax, legal fees on the original purchase of the property, and any capital improvements made, including strata assessments. The commission and tax and legal fees arising from the sale are not deductible for purposes of calculating the tax owing at the time of the sale. The seller can claim these expenses by filing a Canadian tax return subsequent to the sale. I hope this video is of assistance, but if you have any questions, please don't hesitate to call us. Thanks very much.